serving the Oklahoma City and Salt Lake City real estate market with pride and gladness. We love getting to be a leverager of skill, growing skill in multiple different ways, and bringing on people and training them to be the most excellent service providers in the area. And thank you very much to the people that showed me BeLive as a good option to live stream while I'm screen share while I'm live streaming. Boom. So fresh broker stats came out last night, and I wanted to get on and share these with you right away as a constant discipline of keeping us in the know about the real estate market. Because what we find is that now more than ever before in the last 20 years, so like, ever, now more than normal, the amount of mania, hysteria, and undisciplined speech around real estate and all assets, all of them, it's second to none. And so what's interesting, and I've shared this in a previous live stream about the Oklahoma City real estate market, is that this year has followed the same trajectory, the same normal ebbs and flows as most of the previous years, except at a amplified volume. So by that I mean every year in the summer, you have these new outrageous compared to the previous year's sale values, and the early adopters that put their house on the market in late April, May, June, July. They're setting these amazing records, or setting these encouraging neighborhood norms, and that gets shared down the street, at the water cooler, all these different places. And so what you end up having is, Larry tells Bill, you know what my house sold for? Bill is shocked. Bill goes home, tells Linda. Linda tells Martha. And then all of a sudden, as you get late into the year, you get what I would call the laggards, the Lindas and the Bettys. And the Lindas and the Bettys and their husbands, or maybe their wives, they say, hey, let's sell our house. And so they call the real estate agent first week of August. Real estate agent says, well, of course I would love to help you sell your house. They send the photographer out, they go get everything ready, and then it's live on the market by the third week in August. What else happens the third week of August? School. School happens the third week of August. So school happens, we go back to school, and then it's not that people just fell off the face of the planet. It's just that a major transition happened. And this is not exclusive to Oklahoma City by any means, but it is discernible and predictable in Oklahoma City. So for about a week and a half, the brakes just get hard pumped and real estate stops going into contract. So if you put your house on the market, within a week of that, or during that week, pray tell, you won't have very many showings. You won't have very much action on your house at all. And so the number of times that people during that period called and said, I listed my house, we've had one showing in the week and a half, and oh my gosh, the bubble popped. I'm really nervous. No. It's just every year. Same thing with the state fair. Week and a half, brakes pumped, no real estate happens. I mean, some mainly out-of-state investors and people that got hired or fired or something very urgent, but very, very abnormal in that 3-week cumulative period, spread over about a month, for real estate to happen at a normal volume. So what you have is predictable ebbs and flows, yet because of the mania and the craziness of this year and the last year, you have people going, is this it? Is the sky falling? Well, in fact, no, the sky is not falling. It is the market going down. That's what we want to dive into today. So I'm gonna share my screen here, and we're gonna walk through the October 2021 analysis that the MLS, the Multiple Listing Service of Oklahoma, has released, and they are so gracious to be studiers and students of the data and publish this each month. And I want to be early and often in bringing these things to you. So let's flop this around and dive in here. So what you see is the MLS OK report. So we're going to start with just kind of the base level information. we've got a decrease in the month supply of inventory. And a refresher on what MSI, or month supply of inventory, means is it considers the typical rates of sale. So given the prevailing current rate of sale, how many months could the current inventory sustain the market without a change in that? And so MSI, or month supply of inventory, is considered to be an indication of how balanced the market is. In general, painting with broad brushes here, an MSI of 6 is considered to be balanced. Of less than 6 is considered to be a seller's market. More than 6 is considered to be a buyer's market. So if your current inventory could sustain the market for 6 months, that's considered to be fairly balanced. So the MSI is down, the median sales price is up. That is true for both single-family homes, but that is true only for single-family homes, and it actually decreased 4% for the townhouse and condos segment. And then the average days on market decreased. Again, that was a big trend we saw last month as well. So let's dive in. Obviously, this is information, or obviously, statedly now, this is information produced by MLSOK, not for sales advice, just for understanding the market, not for a bunch of shady stuff. So shady stuff, we won't be doing you. All right, October 2021. Here's this first column here I want to hone in on. October 2021 compared to October 2020. So that's, late in the year last year, we were already in full insanity mode. We had gone through the ebbs and the flows. We had freaked out and said, oh my goodness, the market is crazy, or, COVID's crazy. And then we said, oh, nothing's going to happen. Like, we got to hide in our houses for how long? And then that drug on. And then the interest rates, we were promised they wouldn't go up. And then builders, they were like, should we build stuff? And then we all became aware that new houses aren't being produced, and there's a lot of people, and then people started moving everywhere, and like the entire state of Washington, and then half of Utah, and then like a third of California, and then like a third of Austin all moved to Oklahoma City and Tulsa and Wichita and these types of places. And so it was insanity. And by October of last year, we were in full cooked insanity mode. So what's interesting to me is this. That was already fully cooked insanity, and we had 2,684 homes sold, or transactions closed. And then last month we had 2,415. So fewer homes sold, fewer homes closed. And then look at this total volume: 640 million, 640 million. We are with fully 249, I think, fewer closings. Our transaction volume is almost identical, down to about 100,000. That's pretty nuts. So therefore, the average price, not surprisingly, is significantly higher. But look at this. So that's looking October 2021 to October 2020. When we look October 2021 to the month right before it, lower transaction volume. That's normal for September to October in general. But then, and then correspondingly, we have a lower overall closed volume, but proportionally higher. So our average price goes from 253 per home to 265. And then our median price is also up. Then this has been pretty well established trend this year. So last year we were still seeing overall your selling price compared to your list price is about 98%. So you're going to close about 2% or less, 2% on average under your list price when you take the full market in view. And then for most of 2021, that has been established at 99%, like hard, yeah, like 99%. So that's, just kind of a more deep entrenching of the trend. And so last year, average days on market was 35. This cycle, 19. So it's actually up from last month. Last month we were looking at 17 days on market. And then number of listings. So this would be something that has an impact on the month supply of inventory. So the number of listings, 3161. So that's down from last month. It's mega down from last year. So it's down, yeah, a substantial percent from last year. So looking at our total close, let's see if we can get some new information here. It's really all of the stuff that was discussed above. Yeah, that's all. That's all information about. So let's dive into a little bit more. So you can see here the number of closings throughout the months of this year. And so we've been steadily up from the lows of January and February, shot up in March, up, way up, and then falter, up, down, down. So it will be very interesting to see what happens over the next 4 months, because January and February are typically the lowest months. But we've seen an increase in definitely the value of the sales and a decrease in the month supply of inventory. That's been very, very interesting to watch. All right. Median sales price, not surprisingly, is up, but then as always in the Oklahoma City market, townhouse and condo section are, are very, very much more volatile than the single family home. All right, let's look at our monthly indicators. I'm going to hone in on primarily the MSI calculation. All right, let's look at this October. So looking at a monthly view over the last few years. So look at that. So we actually have more new listings in October of 2021 than in 2020 or 2019, pre-craziness, like pandemic craziness. So that's interesting. Townhouse has been a lot flatter, but look at, it's still proportionally up. And then year to date. So the cumulative number of listings is, yeah, that's less instructive. Look at this. Historical new listings by month. Man, does that not look like an EKG? All right, but yeah, you can still see these new listings. The upward trend here is very interesting. We are at a higher, like see this 3,000, this little line here. We broke it in this 2017, 2018, 2019. And now we're way above it. So seem to have a lot of new listings. Seem to have a proportionally high amount of new listings. Yet our month supply of inventory is down, which means the velocity is way up. All right. Average days on market. So check this out. This has been fascinating. So 2019 to 2021. So average pre-pandemic hysteria and then ensuing hysteria was 44 days on market. And then we talked about this earlier, we're at 18 days on market. Fascinating. All right, I've gotta wrap this up, and I know you guys you want to know what's our MSI? Are we are we cooling? Are we back towards a more balanced market? Let's see. Look at this inventory of homes for sale. So inventory, and that would be a measure of, this isn't the month's supply of inventory measure, but this is the total inventory. In October of 2009, we had 5,282 units available, and now we've got 3,200. So while the new listings are up, okay, yeah, so that would be, yeah, while new listings are up, the inventory availability is down because we have a higher velocity of homes that are active listings being taken into pending listings and then on to closed listings. So 2019 pre-pandemic insanity, our MSI was 2.6, which for Oklahoma City, just a reminder, like we historically have been like 3 to 3.8 is kind of like where we camp. So still like not a buyer's market for a long time. And when we tend to be a slow and steady wins the race kind of market, yet we have been steadily, so I'm actually surprised each time I see this to see that in 2019, it was already tipped to be more of a seller's market than our historical norms. And then late 2020, 1.5, like that's pretty aggressive, aggressively seller's market. We hit 0.7 in a couple months of 2021, especially in certain submarkets. And then we're even lower now. But last month, we averaged 1.3 months of inventory. So looking at this historical months of supply of inventory chart, yeah, look at this. 2011, 2012, this is townhouses and condos. So again, always more volatile in our market than townhouses or than single families. But then look at this light blue line below, 6. And then, tips right over here to the buyer's market. And then since late 2011, we haven't been back above that 6 historical trend line, or as Marin Cattuso would call it, maybe the echo happens here, and then we're down. So wrapping this up, is the market softening? Is the bubble bursting? Is the fizzle sizzling, or the sizzling fizzling? It doesn't seem like it. And we're not speculating about what will be. That's a different thing altogether. But looking back and saying, what is the market doing? This is what I want. This is why I want to unpack these as often and as early as we can, is because knowing what we're seeing and knowing the implications of that can be instructive in knowing how to move forward. And so this idea of the market cooling just isn't there. It's unfounded. We have still few enough homes available for purchase compared to the number of people that want to purchase them, that the prices per home are up, the velocity of sales is up. Who knows if it will continue to go up, but it is up. And that's a critical factor here. So you hear this discussed at the water cooler. If you hear people saying, oh, it's starting to cool off, you can say, have you seen our MSI? Have you seen the average sale price? Have you seen any of those going down month by month? Have you seen them going down compared to October of last year? Not really. Sales volume, absolutely down, because that's always the case. So back to that original idea. Let's not be surprised by things that are not surprising. So when you list your house the week before the state fair, don't be surprised that no one comes and sees it for 3 weeks. It's not that all those people went to the state fair. It's just a thing. So be informed, be well, and have a ton of fun. Thanks for joining us. Anything that we can do in the world of real estate brokerage, helping you buy and sell your personal homes, helping you buy and sell investment properties, and managing your investment properties, we would count it great joy. Message, comments on this, send us an email. Check out our website at craftsmanre.com. Let us know how we can help. Thanks for checking this out. I'll get rid of that next time. I've loved this tool so far. It's Be Live. And if you want to be live on your live streams, it's pretty cool. See y'all.